welcome to series 3 of tax season with Christine, and we're going to go into a really deep dive into what can you claim. But before we do that, let's actually see why we want to claim something. It doesn't make sense. I'm making all this money and I'm spending all this money, but is there a relationship?
Yeah,
there.
This honestly is one of the most popular questions that I get, and that's because it's very important. So why do we care, right? Mm-hmm. We care because claims reduce our taxable income. Lower taxable income means lower taxes that you pay. So that's what it really comes down to.
That's all good. And some of the claims, I've heard of claiming things that are fun also in your business that are claim expenses in your income. So you're still obviously benefiting from that claim as an owner, as a responsible person in your business. So why not claim those things and lower your tax bracket?
Exactly.
Right?
Yeah.
I had questions like, obviously we're going to go into projects. I mean, what can they actually claim when they have a job? Say that they're going to go and do painting a room.
Yeah.
Right?
So what can you claim? So first of all, if you buy the supplies, you can claim that. So the paint, the tape, what else? You can.
What about their I'm always curious because this is huge for skilled doers.
Yeah.
In the industry in general.
Yeah.
Is I want to make $40 an hour.
Okay.
Right, but I always ask myself, my travel costs, my travel fuel to get to that job, my time that I've invested into, even quoting in that, is never actually accounted.
Yeah.
Right? So is that something that I can claim, like that the gas, for example, going to that project?
Yeah, exactly. So because you're a contractor and that technically everything that is involved in the project from start to finish is that's what makes you the money. You can claim everything. So the gas, or I guess like mileage that you use to get to the project, the materials you use to complete the project, as well as your time spent, you kind of have to take that into account as well when you're bidding on a project.
I'm going to do a mini series and attach it to this one here to talk about mileage, because I know that we can go in depth into it and how do you actually keep track of it and claim it. So I'm not going to go there right now, but know that you can actually claim gas and mileage into it.
There's a way to do it. There's only actually one way, the right way to do it. So it's a very picky.
Yeah. Well, I want to talk about maybe in depth in the next one if gas and phone.
Sure.
So let's actually go back to what is it that I can claim. So I understand then if I am doing a painting room, is anything that is material. What about if I have rollers that I reuse?
You can claim those. So anything that you buy that will last you more than, let's say, one job, or a year, more than 2 years, like that, those are now called assets. So actually they're no longer really expenses, and this might be a bit more of a complicated scenario, but anything that lasts you for more than a year, you put it in your financials as an asset, and then you depreciate that over time. So depreciation is just another word for wear and tear. So instead of you taking the expense in a lump sum for that 1 year, you are actually, let's say something will last you 2 years. You will divide that cost by 2, and then you take the first half of that expense in year 1, and then the other half of the expense in year 2.
So this is something, I think this episode is going to be a little long, but it's really juicy, so I don't want to miss anything. So when I was a contractor, I was always really intrigued about what is my profit that I actually made in that specific project. So address 123 Royal Oak, right? I'm going to go do a reno there. What is my income and what did I actually spend there? Besides all the material that has normal tear and wear and tear, is what did I buy that is specific, that's going to stay basically there, and that I have a receipt. That's how I saw it. And then that I could calculate, cost of goods sold, which is another term that they use, is like hard material that you're leaving. So for me, it was flooring, cabinets, labor that I was paying out specific for that job. Can we expense labor as skilled doers?
So technically when you're
That's Luna.
There's
Sorry.
Luna. Yeah, that's okay.
We're our office dog.
Yeah.
Okay.
So, okay, let's, your question was, can you expense labor? Yeah, so if
My own labor.
Your
like
own labor,
yeah.
exactly. So, okay, this all comes back to how much are you paying yourself, right? So, yes, when you want to look at your financials on a project by project basis, you have to absolutely include the cost of your time in it in order for you to get a better picture of was I profitable, right? So whatever that labor number is, whether it's you paying someone else to help you, as well as your time, so that includes travel time, prep time, actually doing stuff time, you have to incorporate that in your summary. So I just wanted to kind of like wrap that section up by saying that maybe your first 2 jobs you underbid because like you don't know or you don't have experience for that particular project. But that's why your financial statements and your profit and loss statement is so important, is because at the end of each project, my tip for you is to actually see what you budgeted. So like, I think it's gonna take me 2 hours and whatever, $100 of materials. And then right after the project, go back in and put in your actuals and really say, okay, did it really take me 2 hours? And if it didn't, then too bad, like it's the past, but that's what's so useful about the profit and loss statement, is at least you can see that and you can apply that for the future.
And at least I'm honest to myself.
Exactly.
Right?
Yeah.
I didn't charge for this project 40. I actually made 20 an hour.
Yeah.
Well, what am I going to change next time? And it doesn't necessarily mean junking the price up. Maybe I can be more efficient.
Exactly.
So that's a learning experience there. Perfect. Let's see if there's anything else that I'm missing here.
Do you want me to touch on like in general, like what you can claim for
yes,
business?
Absolutely.
Think of all the expenses and purchases that you have to do in order to make that income. So think about it in a way that if I don't buy this paint, I can't paint the room. If I don't buy a brush, I can't paint the room. If I don't drive to the client, I can't get to the client. So anything that involves you making the money, or like that is required for you to make the money, you can claim that.
So I'm gonna ask. So what about hands-on tools? I get it. I think that is really visual for us. What about accounting software? What about JobJar's fee, right? Like their commission, our commission to promote business for skill doors.
Exactly. So let's talk about JobJar fee first. So JobJar fee is something that is called a cost of goods sold. I think you mentioned that a little bit. So cost of goods sold is just another way of saying that you need, like that expense is required in order for you to make the money. So in that case, a JobJar fee is a cost of goods sold. However, the other example you gave is accounting software. You don't need an accounting software to get a job, let's say, but you need an accounting software as part of your overall business. So those are now called operating expenses. So these are the expenses that are incurred regardless of how many jobs you bid on, how many jobs you get. So just to wrap it up, cost of goods sold is the expenses that are required in order for you to make the money, so it's direct. Whereas operating expenses are things like rent. You have to incur rent no matter what. Sorry, I'm talking about office rent. So let's say if you have an office, right? Accounting software, paying your accountant. So these expenses are there regardless of how much revenue you're actually bringing in.
Oh, okay, great. Okay.
So, and the reason,
a good way to see it.
Yeah, and the reason why I want to point that out is because let's say you're looking at your profit and loss statement and you're like really getting down on yourself on like, oh, I'm not making money, I have all these expenses. What you can start cutting is actually your operating expenses, because those are the things that are indirect. It costs you money, but it doesn't necessarily increase your income. Whereas a JobJar fee, every time you pay a JobJar fee, you actually get a job. And so it's like, those are the things you have to think about as a business owner.
So good. Yeah. Perfect. Okay. Well, this one went a little bit longer, but it's so juicy. I didn't want to miss anything.
Yeah.
All right. We'll continue on to the next series here.